Welcome back to the channel, and thank you for joining me. I'm RsiOverbought, and here we break down automated trading strategies for MetaTrader 5 in plain, educational language. Today we're exploring an expert advisor called VWAP Exhaustion Fade. It blends two well-known tools, the volume-weighted average price and the relative strength index, into an intraday mean reversion approach. By the end of this video, you'll understand how it measures an overextended move, how it looks for exhaustion, and how it aims to fade price back toward fair value. As always, this is educational information only, not financial advice. Let's get into it. Let's start with the big picture. VWAP Exhaustion Fade is an intraday mean reversion strategy. The core idea is that within a single trading session, price tends to be pulled back toward its volume-weighted average price, often shortened to VWAP. VWAP is widely watched as an institutional fair value benchmark, so when price drifts far away from it, that stretch frequently snaps back over the course of the day. This expert advisor does not chase momentum. Instead, it waits patiently for price to travel an unusually large distance away from VWAP, and then it looks to fade that move, meaning it positions for a move back toward the average. The key word is exhaustion. The strategy is only interested when a move looks stretched and tired, not when it is fresh and strong. To measure how stretched price is, the strategy uses the average true range, or ATR. Rather than using a fixed number of pips, it scales the required distance by current volatility. That keeps the approach adaptive, so it demands a wider stretch when the market is volatile and a smaller one when the market is calm. On top of that distance filter sits the relative strength index, the classic momentum oscillator. The RSI must be reading an exhaustion extreme, oversold for a long or overbought for a short, before any position is considered. Finally, a confirming reversal candle must print in the fade direction. So what kind of trader is this style suited to, in an educational sense? It tends to appeal to those who prefer counter-trend, mean reversion thinking, and who are comfortable on intraday timeframes where a session VWAP is meaningful. It is a patient, rules-based approach that waits for several conditions to line up at once. Of course, mean reversion is not a sure thing. Sometimes a stretched move keeps stretching, which is exactly why the strategy also defines a protective stop. Trading always involves risk, and losses are a normal part of any approach. Everything here is for learning purposes only. Now let's walk through the exact logic, step by step. The expert advisor only acts when a bar has fully closed, so it works on confirmed data rather than a flickering, still-forming candle. First, it maintains a session-anchored VWAP. Every time the calendar day changes, the accumulators reset, and VWAP begins building again from the start of the new session. For each closed bar, the strategy takes the typical price, the average of the high, low, and close, and weights it by that bar's tick volume. That running, volume-weighted figure becomes our fair value reference line. Next come the warm-up guards. The EA needs enough closed bars to compute the RSI and the ATR reliably, and it also waits until a minimum number of bars into the session, 6 by default, so that VWAP has enough data behind it to be meaningful. Once those checks pass, the strategy measures the stretch, which is simply the distance from the closed bar's price to VWAP. It compares that stretch to a band, calculated as the deviation multiplier, defaulting to 1.6, multiplied by the current ATR. For a long setup, three things must align. Price must be stretched below VWAP by more than that band. The RSI must be at or below the oversold level, 30 by default, and the closed bar must be a bullish reversal candle, meaning its close is above its open. When all three line up, the EA signals a buy. The short side is the mirror image. Price must be stretched above VWAP by more than the band. The RSI must be at or above the overbought level, 70 by default, and the closed bar must be a bearish candle. When that aligns, the EA signals a sell. Risk is defined immediately. On a long, the stop is placed at the stop multiplier, 1.4 ATR, below entry, and a take profit sits at the take profit multiplier, 2.2 ATR, above. That is a reward to risk on the bracket of roughly 1.5 to 1. Beyond that fixed bracket, the strategy actively manages the position back toward fair value, closing the trade once price reverts to the VWAP line. Only one position per magic number is held at a time. Let's read through the MQL5 code on screen, just as you'd see it in MetaEditor. At the top are the input parameters. RSI period and ATR period set the lookback for our two indicators, both 14 by default. Deviation ATR multiple, here 1.6, controls how far price must stretch from VWAP before a fade is considered. RsiOversold and RsiOverbought, 30 and 70, define the exhaustion levels. StopATR multiple and TpATR multiple, 1.4 and 2.2, size the protective stop and the take profit in ATR units. Min session bars and lots round things out. Just below, the strategy builds its signal. It calculates stretch as the close bar's price minus the VWAP and a band equal to the deviation multiple times ATR. It also flags whether the closed candle is bullish or bearish. Now look at the long block. The condition reads, if stretch is at or below minus band, and RSI is at or below the oversold level, and we have a bullish candle, then it acts. The stop is set 1.4 ATR below the ask, the take profit 2.2 ATR above, and trade.by sends the order. The short block mirrors it exactly. If stretch is at or above the positive band, RSI is at or above overbought, and the candle is bearish, the stop goes 1.4 ATR above the bid, the take profit 2.2 ATR below, and trade.sell submits the order. Both sides are symmetrical, with risk defined the moment the trade opens. Let's bring this to life on the chart. The blue line winding through the candles is our session VWAP, the volume-weighted fair value reference. Below the price, in the lower panel, is the RSI, with the dashed lines marking the oversold level at 30 and the overbought level at 70. Watch how the two work together. We begin on the left, with price hovering right around the VWAP line. Nothing of interest yet. Then notice the next couple of candles. Price starts sliding lower, pushing away from VWAP and stretching out underneath it. As price falls, the RSI in the lower panel drops too, sinking down toward that oversold zone. By the third candle, price has reached a fresh low, well below fair value, and the RSI dips into oversold, beneath 30. This is the exhaustion the strategy is hunting for, a move stretched in ATR-scaled distance below VWAP, with momentum reading tired. But the strategy does not buy on the downthrust itself. It waits for confirmation. On the very next candle, a bullish reversal candle prints, closing above its open while RSI is still in that oversold region. Now all three conditions align, and you can see the buy entry marker appear. The protective stop would sit a defined ATR distance below the recent low, just beyond the extreme, keeping risk contained if price keeps falling. From there, follow the move. Price lifts off the low and begins climbing back toward the VWAP line, exactly the mean reversion the strategy is built around. As price rises, the RSI climbs back toward the middle. When price reaches the VWAP line, you see the first take profit marker, labeled revert to VWAP. The strategy has captured the snapback to fair value and the long position is closed. Now the chart flips to the short side, a perfect mirror. After tagging VWAP, price keeps pushing higher, stretching upward, and pulling away from the average to the upside. Watch the RSI. It rises steadily, and by the 8th candle it pushes up into the overbought zone, above 70, while price sits well above VWAP. Again, that is exhaustion, this time on the upside. Once more, the strategy waits for a reversal candle. A bearish candle prints, closing below its open while RSI is still overbought, and the sell entry marker appears. The stop would rest a measured ATR distance above the recent high, just beyond the extreme. Price then rolls over and falls back toward the VWAP line, and as it returns to fair value, the second take profit marker prints. The short is closed at the reversion. So in both directions the logic is identical. Wait for price to stretch far from VWAP, wait for RSI to confirm exhaustion, wait for a reversal candle, then fade the move back toward fair value with a defined ATR stop on the other side. Remember, on a live chart price does not always revert, which is exactly why that stop matters. This walkthrough is an illustration for learning only. And that brings us to the end. Today we explored VWAP Exhaustion Fade, an intraday mean reversion strategy that anchors to the session VWAP, measures how far price has stretched using ATR, waits for the RSI to signal exhaustion, and then fades the move back toward fair value with a defined stop. We walked through the entry and exit logic, read the key parts of the MQL5 code, and stepped through both a long and a short example on the chart. Please remember that everything in this video is educational information only and not financial advice, a recommendation, or a solicitation. Trading involves risk, and losses do occur. If you found this breakdown helpful, a like really helps the channel, and do subscribe and leave a comment with any strategy you'd like me to analyze next. You can find more at www.RsiOverbought.live. Past performance does not guarantee future results. Trade responsibly.